What is it like to be the private banker for the ultra-rich? That's the subject of today's edition of Inside AB. I'm Jeremy Lawrence and I'm joined here by Bernd de Boosman. Okay, Bernd, you interviewed the CEO of Julius Baer, private bank, Swiss bank. Tell us about the conversation and first about the bank itself.
Well, the bank itself is actually quite an old institution. It was founded in 1890 in Zurich as kind of a much smaller banking partnership. But over the years, it's just kept growing and growing. And today it has offices in the Middle East, in Europe, and Latin America. They have about 400 billion in assets under management. So it's a very substantial operation globally. And recently they've kind of been expanding. There's been a lot of mergers and acquisitions. Most prominently last year, they bought 95% stake in a Brazilian wealth management firm. So it's growing, especially in this region and in Latin America, which is interesting.
Okay, so tell us more about the work in this region.
Well, it's interesting. They've been in Dubai for quite some time. Even before that, they were handling clients in Dubai, but they were doing so from Switzerland. But in 2004, when DIFC first opened, it became one of the first banks to move into DIFC. And now the office here has about 120 employees. They also have offices in Bahrain, in Abu Dhabi. They have a small office in Beirut. And they're growing that. This year they're bringing on 80 new relationship managers. And they didn't want to say how many of them will be in the Middle East, but he says it's quite substantial because this is a region that's been very profitable for them. So they want to continue growing in the Middle East.
Right. Bernhard Hodler, the CEO, I understand there was some controversy when he took over.
Well, it's interesting. His predecessor, his name was Boris Collardi. He rather suddenly, it sounds like he left the company and he went to another company called Pictet. So there was a lot of concerns that he would kind of take all his clients with him. In the media that focuses on private banking, there was a lot of rumors being thrown around. There was kind of a boardroom scramble. There was about a week before they announced that Mr. Hodler would take the position he's in now, and so it's interesting. I mean, he's downplayed any concerns that he might just be a stopgap measure. At the time he gave a very famous press conference. He said, what happens if I get hit by a bus? But he said, there always needs to be a plan B, and in this case, he was the plan B after his predecessor left. So it was interesting. I mean, it was a lot of scrambling at the time.
Right. Exciting times for a Swiss bank.
Yeah,
you think of them as being very conservative, don't you, really? Which brings us to the next point. How are they adapting these old school institutions to a new era and to technology?
Well, it's interesting. Like I said, it's a very old bank, but I think they've kind of seen the writing on the wall in terms of fintech and technology. They've recently hired a chief digital officer that reports directly to the chief operating officer of the company. They've started using AI-assisted machinery that kind of analyzes what clients want and what they need, their appetite for risk, and that kind of helps the relationship manager that deals with that client. The AI kind of helps them narrow down what they need to discuss with the client. So it's kind of mixing new technology with the way this has been done for a very long time. On the other hand, I asked him about blockchain and cryptocurrencies, and he said blockchain he does see some value in terms, for example, shared documentation. It's a secure platform, so there's a benefit in that. But he's not that excited about cryptocurrencies. He says, he doesn't think the idea is bad, but he essentially tells his clients that in his view it's similar to gambling. He doesn't advise that they do invest in cryptos, but if they want to, that can be made available to them.
Fine. So what else as we move into the future for the bank?
Well, it's interesting. You would think with such a big network, they would kind of venture out of their traditional realm of wealth management. But he says, that just doesn't work. Clients want a private bank that only does that, private banking and wealth management. So he's not getting into B2B. He's not getting into asset management. They're kind of going to stick to what they've been doing. They'll continue doing lots of mergers and acquisitions around the world. Latin America is kind of an area he sees as one of the biggest growth opportunities outside the Middle East. But he's going to continue what the bank is.
I guess they don't want a conflict of interest with their clients.
Yeah, so I mean, lots of private banks and wealth managers end up selling their clients products from that private bank. But I mean, that's where he says Julius Baer differentiates itself, because they don't want as little conflict of interest as possible. And that's what he thinks clients respond to.
Fantastic. Right, well, you've been watching today's edition of Inside AB. Please do join us every weekday at 10 a.m. and subscribe and share with all our usual channels. Thanks.